Welcome back. And if you are new here, I am glad you found this video today, because what I am about to tell you in the next 7 minutes could be the most important financial conversation you have this week. While you were sleeping, the world changed. The United States and Israel launched coordinated military strikes on Iran. The Strait of Hormuz, the narrow waterway carrying 20% of the world's oil, is now being blocked. Gold just crossed $5,300 an ounce, an all-time record in human history. And the stock market dropped 600 points before breakfast. Millions of Americans right now are staring at their phones asking one question: what do I do with my money? I'm going to give you a straight answer today. Not vague, not "it depends." A clear, honest verdict based on exactly what is happening right now in March 2026 in real time. 7 minutes. Stay with me. Let us be completely clear about what we are dealing with. This is not a market correction. This is not a rumor. This is an active military conflict between the United States and Iran, two of the most economically connected countries on the planet. Gold is at record highs. Oil is surging past levels not seen in years. Defense stocks are climbing, and your 401k, if it's sitting in a standard diversified fund, is quietly bleeding right now while you read the headlines. Most financial advisors are telling you to stay calm. Hold your positions, do not panic. That advice is partially right, but it is also dangerously incomplete. Incomplete advice in a crisis costs real money. So, let's go deeper. The stock market dropped hard when the strikes were announced. The Dow fell nearly 600 points. European markets fell. Asian markets fell. Then, something interesting happened. Stocks partially recovered the same day. Why? Because Wall Street is betting this ends in weeks. Short conflict, quick resolution. Markets bounce back. That bet has been right historically. But here's what Wall Street is not saying loudly enough. Even if stocks recover, oil may not come down quickly. And oil above $100 per barrel means inflation stays high, which means the Federal Reserve keeps interest rates elevated, which means borrowing costs stay painful, which means consumer spending slows, which means corporate earnings weaken. That chain reaction does not resolve itself in 4 weeks. It plays out quietly over months, in your grocery bill, in your mortgage payment, in your retirement account, not in one dramatic crash, but in a slow, steady erosion you barely notice until it's already gone. Meanwhile, gold is doing exactly what gold does in this environment. It is rising, fast, and for a very specific reason. Here is your direct answer. If you already own gold, do not sell. Hold it. This rally has more room. If you own zero gold right now, do not panic and buy at $5,300 an ounce. That is the peak of fear. Buying at the peak of fear is precisely how regular investors lose money on what should be a winning trade. Here's what you do instead. Wait. Gold will pull back the moment any ceasefire signal hits the news. Even a small diplomatic gesture from Iran will knock 10 to 15% off the gold price within hours. That pullback, somewhere around $4,800 to $5,000, is your entry point. At that moment, buy. Not everything, not your entire savings. A 15 to 20% allocation in your overall portfolio is exactly what historical data supports during extended geopolitical uncertainty. Do not think of gold right now as an investment. Think of it as insurance. You are not buying it to get rich overnight. You are buying it so that if this conflict drags on for 6 months, your wealth does not quietly disappear while you were waiting for things to calm down. Here's where most people make a catastrophic mistake. The answer is not to sell all your stocks and run. The answer is to sell the right stocks and buy the right stocks. Right now, these are the dangerous sectors. Airline stocks. Aviation fuel costs are exploding, and nobody wants to fly through a war zone. Consumer luxury brands. People stop buying expensive things when they're scared. Rate-sensitive technology stocks. If the Fed holds interest rates high, growth stocks get punished the hardest and the longest. Right now, these sectors are actually winning. Defense contractors, Lockheed Martin, Northrop Grumman, RTX, are rising because war means military budgets go up, guaranteed, regardless of which party is in power. Energy companies, ExxonMobil and Chevron, are benefiting directly from high oil prices. Commodity stocks, anything connected to oil, gas, and raw materials performs strongly when supply gets disrupted at the source. So, do not sell stocks, rotate stocks. Move quietly and calmly out of the sectors that bleed in a high oil, high inflation environment. Move into the sectors that benefit from exactly this situation. That one adjustment done with no emotion can be the difference between losing 15% and gaining 5% in the exact same market conditions. Here's where most finance channels skip past. Hold more cash than you normally would, right now, today. Not because cash is a great investment, it's not. Inflation is eating it slowly. But because when this conflict de-escalates, and historically these conflicts always do de-escalate, beaten down stocks are going to go on sale. Airlines will drop 60% and then fully recover. Consumer tech will get hammered and then rebound stronger. That recovery trade is where serious money is made after a geopolitical shock. But you can only make that trade if you have cash ready to deploy when everyone else is still too scared to act. The investors who come out ahead after a crisis are never the ones who made the perfect move on day one. They're the ones who stayed patient, preserved capital, and bought aggressively when the fear was at its absolute worst. Panic sells. Patience wins. Every single time in history. Here's everything you need to know. 4 points. Remember these. Number 1, do not buy gold today at $5,300. Wait for the pullback to about $4,800. Then buy 15 to 20% of your portfolio in gold. Number 2, do not panic sell all your stocks. Rotate out of airlines, consumer luxury, and rate-sensitive tech. Rotate into energy, defense, and commodities. Number 3, raise your cash position to 20 to 25% right now. The recovery trade is coming and you need to be ready for it. Number 4, do absolutely nothing emotional. No panic selling at the bottom, no panic buying at the top. Both moves have the same result. You lose money while calmer investors take it from you. The crisis is real. The risk is real. But so is the opportunity for anyone disciplined enough to think clearly while everyone else is reacting emotionally. That's the honest truth about what is happening to your money right now and exactly what to do about it. If this video helped you think more clearly today, I have one small request. Hit the subscribe button. Not for me, for yourself, because this crisis will not be the last one. And every time the world gets uncertain, I'll be right here breaking it down in plain language, so you always know where your money stands. If you have a question, any question at all about gold, stocks, or what to do next, drop it in the comments below. I read every single one, and I will answer yours personally. Thank you for watching. Stay calm, stay smart, and I'll see you in the next one.